Market is a pivotal do or die zone, simply meaning, are we going to have a breakout to finish off the week, or are we going to have a fake out pullback, as I've been talking about for this week? Now, we've been chopping and grinding higher, which is a bullish sentiment, but what we look for as traders and investors is what people do not see. It doesn't mean we don't trade the chart in front of us. It just simply means what's coming next, what's behind the scenes of this. So if you notice today, the market drove to the downside off the open. Now, why was that? That was because we had unemployment claims that came in lower than expected. If you don't know, the unemployment claims are a key reading for the Fed to be able to cut rates more aggressively in the future. Now, we have an 87% chance that we're going to have a rate cut. That's already factored in. Rate cuts are coming next week on Wednesday. Now, the sentiment is going to be very important. So what Fed Powell says afterwards is going to be very key. Now, Brian, I saw the market going up in the pre-market session because Meta was spurring higher. Yes, we can have positive news, but it's always indicative of what's the data to follow, because the data is more indicative of how the economy is doing, not just one company. All right, that was a mouthful. My name is Dr. B. If you've never been here before, welcome to the channel, welcome to the family. If you've been here, you already know how we do. Let's jump into it today on this quick video and update for this week and start of December. All right, so here's the positive news for Meta. Zuckerberg plans to deep cut for metaverse efforts, right? And that spurred Meta higher, right? But Meta still is underneath the daily 50 moving average, just underneath that gap fill from its earnings. So we got to see how Meta reacts for the remainder of the couple of weeks, right? But if you bought up Meta shares underneath 600, around 600, you did yourself a due diligence and justice. We talked about METU shares at 25, which some people were like, ooh, thank you so much. Like, this was a cheaper version of Meta that you could allow yourself to invest in and get many shares at $25, $26, right? Now those shares are at $33 to $34. Okay. So there you go. Little 2 cents. Now, here's the unemployment claims that I talked about here, 191,000 versus the expectation of 219, right? That's lower. So we saw before, the confusion of the Fed is now that, wait a minute, we had ADP numbers at the beginning of the week that was positive, that showed that actually more people were losing jobs, so on and so forth. Now, this is saying that less people are filing for unemployment. Right. I've got my sentiments around that. I'm not going to go too deep. That could be filings, tax filings. That could be people have side jobs where they're W2, they're not necessarily W2. They're taking, cash payments, whatever it might be. Right. So there's more nuance in that, but the numbers are going to allow the Fed to make a decision. Okay. So that's why the market kind of had a little bit of choppiness today / pullback at the open. Now let's jump into the charts, and I want to show you some interesting things that I see here. Let's jump on SPY first. Okay. And SPY is showing something interesting on the daily chart. Now I want you to look at this. Look at the exact level SPY is sitting right here, what happened last time. So it's a little bit different because they have a longer wick on the candle, but we look at candle structure and candle location, right? We're sitting back at an interesting point here, which is right underneath 685, okay? Now, last time we were sitting here, look at the type of candle that formed on SPY. You see this hammer candle that looks like a bullish candle because we had created a new high, but it's at the top and it's red, right? Don't matter necessarily the color, but this can signal sometimes reversals. But the only time a reversal happens is if we take out the previous low of that candle. So in this case, that was sitting right at 681. Ironically, look to your right here. What does this candle look like? Almost identical. So do you not think that investors, traders, everyone, hedge funds is looking at the same chart that we are? Most of them are, okay? So there's going to be a fight up here of what happens, because this can easily be a bullish hammer and we go higher, all right, and hold up this level going in the end of the week. Or this could be a bearish hammer and we take out the lows and immediately pull back, and we have one of those bloody Fridays that comes out of nowhere and people are wondering what the hell's going on, okay? So just want to mention that to you to show you why and how patterns repeat themselves and we react to what happens. We don't estimate, guesstimate. As I like to say on this channel, we keep our head on a swivel. Same thing on QQQ, right? So as long as we hold up the previous lows, right, of that previous day, then we can remain bullish, which would be 619 on Qs. At this time, when it dropped here, that was at 617.80. You can see we kind of gapped down and ended up continuing. But if we don't gap down, or if we don't, drastically start pulling down underneath that level, then the dip's going to continue to get bought and we continue higher on this grind. right? Now, I'm a little bit more leaning towards this situation simply because the more times you press on a level, right? In this case, we were kind of in a downtrend, right? We were coming down and then we popped and then we created a lower high. This time, we're essentially creating higher lows, higher lows, higher lows. And this is the second time that we are pressing up, trying to take out new highs. We just need to gather more troops down here, right? So there's a bunch of bullish sentiment coming up here, but it is proven until proven wrong, right? So you have to understand both sides so you're prepared to react a certain way and you're not shocked and surprised. So I'll give you my sentiment of what I personally think is one of two things, right? I'm ready for either one. Going into the FOMC meeting next week, next Wednesday, or maybe even tomorrow, we just squeeze and go ahead and fill this gap. All right, that's expected. Okay. Now, when the FOMC meeting comes, seemingly that we don't have enough data potentially for the Fed, they're just going to be like, hey, cut, cool. And then Powell might come out and say, well, we don't have enough data. CPI report's been delayed. We saw some jobless claims doing okay. Maybe we won't cut as aggressively going into 2026. And then the market just pulls back and there's our deep pullback, right? So I want these videos to be here on the channel because we can come back and review to say, okay, we reacted. We knew about that. We didn't get too one-sided on, one way or the other. It doesn't mean don't buy the dips. It just means when you're trading or when you're looking and so one-sided, you don't see the other side, right? So same thing that happened down here. Everyone was bearish, 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 bearish. But the lower we got, the traps were set and we spurred higher. Everyone's so bullish, bullish, all-time highs, all-time highs, all-time highs. Okay, we can push into all-time highs and then we're back. Nope. There we go. So there's some unfilled gaps down here. Y'all, if you've not watched my gap fill video, I'll link it to the end of the video. But there are some unfilled gaps that don't have to get filled immediately, but there is obviously that one right there. I think if we go down to the hourly, it'll pull it up here. Yep. There's an unfilled gap on SPY sitting right around, SPY shows a little bit better. Unfilled gap sitting right around here. All right, so there's a pullback zone. And we also have an unfilled gap. There's a little sliver that's not really major right there, back to 661. So if we draw a fib from this current point right here and draw it to the highs, and if this is a high, that is right into that fib 38.2. And then ultimately, guess what? Right into that zone there. So we could have a breakout pullback zone right into here, or we could have a pullback zone as deep as there. And that's still technically a higher low. And we could form that inverse head and shoulders and we can spur to all-time highs. So do not be afraid of the pullbacks. If they happen, be prepared for them, understand what's going on. And just wanted to show you the reaction, the candle structure and location of those two areas so you're not bamboozled, all right? We kind of see what happened on Google today, right? Google had a little bit of a rating downgrade. So it looks so bullish here, 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 here. Nope, right there, right? Still held up support, but that candle, pretty much took out the previous highs and closed lower, yet again, another lower high. Amazon, same thing. We had that positive AI news, right? Amazon formed an inverted hammer here, right? On the daily 20, as you can see that daily 20 closed back underneath it. Now we're in the cluster. If we fail back underneath the new low, we're coming back down to those lows of 214, 215, okay? So I like to have very wide ranges. NVIDIA, right? As long as it's below this cluster, be mindful of that. That cluster of moving averages, sorry, it's a little bit clouded here because we had a good trade on NVIDIA today off of that cluster. NVIDIA has been paying the bills, just these little scalps, absolutely 50, 60%, 40%, so on and so forth, 100% trade at the beginning of the week. All right, NVIDIA has just been awesome, okay? So I wanted to show this, that as long as NVIDIA is underneath this 185, is going to continue to come down, but it is kind of messy in here because at any point we know NVIDIA has been spurring higher lows here. So you got to, pay attention that you don't get too one-sided because one positive news event, NVIDIA does this, right? We've seen it before. So not betting on NVIDIA. I'm just saying for the relative time right now, it is relatively weak. Okay. Let's look at some others. Tesla pushing new highs. Let's watch Tesla back up into these highs of 470. It has been having a nice recovery. Netflix still fairly weak here. I think Netflix grabbing underneath 100 will be nice. AMD weak underneath 220 still. So watch that. Needs to reclaim 220. We got AVGO earnings next week. That'll be very interesting. We also have Oracle earnings next week. That'll be very interesting. So those two names, please keep a lookout on for next week. Really positive catalyst along with the FOMC meeting. If you've been wondering what's been spurring the market higher, why is this IWM? I need to do a whole nother video on IWM, but IWM just going absolutely nuts. What is IWM? IWM are the small cap companies, the Russell 2000. So all new up and coming companies that are trying to get to profitability or that don't have enough revenue, but they're speculative, right? Palantir, NVIDIA, right? Those were once small cap companies at one time. So look at these companies here that you maybe are familiar with. Ionic, right? Spurring off those highs, spurring higher. RGTI, coming back off those lows right there, curling back up. Nice bull flag there off those lows. QBTS, right? Coming off that previous resistance, turned into support. So that is why you're seeing IWM, the small caps, spurring so much higher and aggressively, is because small cap companies need rate cuts, right? They want to borrow money at a cheaper rate because they are essentially non-profitable, don't have much revenue. They need to borrow money at a cheaper rate to keep growing. That's why you're seeing that happen. All right. So without further ado, I appreciate you. Thank you so much for tuning in today's video. If you want to join us for live trading in our live trading room inside of Discord, join Leverage University, our analyst level. Okay, there might be a little bit of a discount that pops up for you. So use that code there that pops up if you would like to join us there. If you just want to join our newsletter for free, get more information about how we work here at Leverage University inside of our Discord. And also if you enjoy the channel and you're just like, hey, I just want a community to kind of be involved in, I want to get off the YouTube and kind of be notified of when a new video comes, any new information, some freebies, all that kind of stuff, the newsletter is down below as well. All right. If you need one-on-one mentorship, that link is there too. A lot of you have been joining that. So I appreciate you. If you'd like one-on-one support, you like my teaching style, we'll be on a Zoom just like this, educating you, set up your charts, get you a full 6-week mentorship with myself, one-on-one. All right. Without further ado, y'all have a great Friday, great rest of the week. And then next week will be, it's going to be a packed house. So let's jump into it. Let's finish off the first week of December positive and have a great rest of the December season, 2025 as well. Talk to y'all soon. Peace, love, and blessings. Bye.